Hey everybody, a little bit of a confusing week this week as we saw inflation data rise, but 10-year Treasury yields fall. Usually those two numbers work in tandem, not opposite the way they are right now. But it's good news because we're seeing interest rates come down too. With oil coming down under $70 a barrel, it is portending better interest rates in the future, which is why we're seeing a positive reaction from the bond and the Treasury markets right now. So what does that mean? They haven't come down a whole lot. We're still hovering about where we were before, eighth of a point better, quarter of a point better, depending on products here and there. But we're moving in the right direction. And what that's really doing is instilling a lot more confidence in not just new home buyers, but people who are selling their homes too. In a lot of places where we were seeing inventory fairly low, we're seeing it start to come back to life a little bit more. Here in San Diego, we saw a lot more active listings this week than there had been the last several or couple months. So it's telling us that sellers are feeling better about selling their house where they might have a lower interest rate and still buying a new house despite getting a higher interest rate for it. And that's going to open up the market. It's going to put more homes out there that are your potential dream home, put you in a better situation, whatever it may be. And there's just more options to choose from. With that, buyers are going to feel the same way. So the buyers are going to start coming back to the markets too with still relatively low inventory. So it's still a good time to be shopping, looking for the right house, figuring out what to do next. Now, the one data point that nobody's really talking about and we're not seeing in the headlines that came out this week is that, and let me get my number right on this, the average household income dropped 1% or 1.1% year over year, while spending rose 2.1%. So what that's telling us is that people are spending more than they're, not more than they're making, but more than they're appreciating through their jobs, through raises. So with that, it creates shaky ground moving forward in terms of the economy, and it makes it even a more important conversation to have with a loan officer, somebody who can discuss affordability and who's willing and able to have a conversation with you about what you should do and not just what you can do. It's not about giving you a letter with a pre-approval saying you buy the house. It's figuring out what you and your family should do in the future. Leave a comment, reach out to me directly. I'm happy to talk and make some sense of all this.